Right. And as I understand it, that's the only bullion dealer that is selling silver right now. I mean, I haven't verified it. I don't even know if I can verify it, but that's the story.
So does it ever become a reality soon that the price begins setting that China begins setting the price here for silver moving
Sure.
forward?
Yeah, they absolutely could set the price. I mean, think about it. If China has an official policy, let's use that number of $128, that they'll sell you. Uh, if the price becomes $128 in China, why wouldn't someone buy off of Comex or buy off of LBMA and turn
Mm-hmm.
around and sell it in China? I
Geo
mean,
arbitrage.
that's the
Yep.
definition of arbitrage. Yeah,
Wow. I mean, so if that does play out, would we eventually see an equilibrium between London, New York, and China when it comes to the pricing mechanism?
yeah. If markets stayed open, of course, the markets will level out. What will happen is they'll find a medium, and if China doesn't bend, and this is something my late partner Jim Sinclair used to talk about. He said uh, he could foresee the day where China would say, "Okay, gold's $50,000 an ounce. It's bid at 50,000. It's offered at 50,000. What do you want to do?" So if they peg the price or set the price at $50,000 or in yuan or whatever, but if, equivalent of $50,000, then what is the price worldwide? It's got to be $50,000
Mm-hmm.
because that's the market. I mean, money is going to flow where it's treated best. And if the West is at $4,000 gold or $5,000 gold, and China's buying it and selling it in whatever quantities you want at $50,000, that then becomes the price. The problem with that is if you jacked up gold prices 12-fold from here, or it wouldn't even have to go 12-fold, it could go less than 100% from here to break. That would break the contracts. That would break the market itself because like I said, for every winner, there's a loser. And can somebody lose 12 times their money and stay solvent? No, they can't pay the winner. Then the winner's a loser. And then the people who are doing business with either the winner or the loser knows they're both dead. You're going to do business with them? You're going to trade with them? No. And that's, I mean, uh, I'm not looking at this and saying, I think this is what could happen. This already happened
Yep.
back in 2008, 2009 with the Lehman Brothers problem. And it took, and think about this, it took only $700 billion in TARP and another, what was it, 16, 17 trillion that we found out 2 years after the fact that the Fed sprayed all over the world, more than half of that to foreign central banks to keep the system floating. Uh, and think about how crazy people went over the $700 billion. I mean, people were wringing their hands for 3 or 4 days because $700 billion is a crazy number. Well, $700 billion is like a broken potato chip that falls out of your pocket now. Who's the white knight going to be? I mean, 16, 17 trillion is not going to fix the problem. Who's going to step up and save the ECB? Who's going to step up and save the Bank of Japan? Who's going to step up and save the Fed? Now, I mentioned the ECB, Bank of Japan, and the Fed. Guess what? They all have negative equity. They're all technically insolvent because the bonds that they already own are underwater to the point where their equity has already been wiped out.
Yeah, I'm pulling up the 10-year yield on the Japanese bond, and these things have not slowed down to the upside.
Well,
I'm looking at, yeah, go ahead.
yeah, they exploded.
Yep.
I mean, if you look at the 10-year bond, I think they bottomed out at what, 0.3%? And now
Yeah, so
they're
here,
what, two,
Yeah. So here's
And the
the
30-year
Japanese
bond is
10-year.
320.
Yeah, the Japanese 10-year at 165, and it has been shooting to the upside consistently now for over a couple years now.
Right. And every time that interest rate ticks up, the bonds that are held by the central bank are less, they have less value.
Yep.
And that's how they've lost their equity. And my question is, who is the white knight? Who's going to step in and save the Fed? Who's going to step in and save the ECB, the Bank of Japan? There is no white knight.
Nope. Now, I don't know what they're going to do. What do you think they're going to do, Bill?
Well, I don't think this is, I think what's happening is they understood where fractional reserve and fiat went. They understood that in 1913 when they began with the Fed. The whole idea was to get the U.S. indebted, and that worked, and the whole world is indebted. If you ask me, the collapse is all part of the plan. Why do you think they've put the laws on the books all over the world? That, I mean, just look at the footnotes in The Great Taking. The plan is to take everyone's capital, make everyone serfs. They want to do the digital ID. They want to do central bank digital currency. They want to be able to shut people off. I mean, can you imagine you and I doing this conversation a year from now with a central bank digital currency? Before the interview was done, your account would be frozen.
Yeah.
So, I don't think it's so much by mistake. I do believe it's part of the plan to try to enslave the world.
Because if they don't, then there'd be mass. It would be their heads that roll.
Correct. Yeah, and I've always said they're going to need something to point at as the reason for the system collapsing. I mean, is it a war? I have no idea what it's going to be, but I've always said that they will not take the blame. They will create some sort of false flag that they can point at and say, our policies were working fine except for XYZ.
Well, I guess we'll stay put. Do you see a risk of them ever confiscating gold and silver, like they confiscated gold back in the early 1900s?
Yeah, if they were to do that, I think it's obviously much more likely that they would do gold instead of silver, because they got to get, at these prices, they got to get 80 ounces of silver to equal every 1 ounce of gold that they confiscate. So yeah, it is a possibility. I think it's more likely that if there's going to be a confiscation, it'll be a nationalization of the mines. And the thought process has been that North America, the United States, and Canada are the safest mining districts in the world. And I don't necessarily agree with that. I think they may be the riskiest. They may have the most risk of anywhere in the world of being confiscated or nationalized.
Are you invested in any? I mean, up to you if you want to answer it. But
sure.
Are you invested in any mining stocks?
Yeah, I have mining stocks all over the world. My biggest position is a company in Africa, in Tanzania. But you've got to you need to spread and diversify your geographical risk, not just whether it's a senior producer, a junior producer, or an explorer. You also need to diversify by continent, by legal jurisdiction. You don't want to be 100% physical silver. You don't want to be 100% physical gold. You don't want to be 100% mining companies, but you want some of all to diversify your risk. And
right.
I mean, we just talked about two risks. One would be nationalization of mines. Another would be confiscation of metal. They can't take it all. If you've got it in your possession, if you have your metal in your possession, and I mean, there's metal all over the world in people's possession. that'll never see the light of day if there's a confiscation. And I think there's absolutely no way that there would be a confiscation where they go house to house, because you'd have 100 deaths in the first day.
Yeah, makes sense. Speaking of diversification, we've talked about gold and silver, but what's your view on platinum? Platinum at one point in time was actually valued higher than gold. Now it's about half the price, or actually less than half the price of gold. Do you anticipate platinum going back to being the numero uno precious metal in terms of pricing, or what's your view on platinum?
Yeah, platinum, if you go back to the early 2000s, at one point it was triple the price of gold.
Mm-hmm.
I don't know. I think, a big use for both platinum and palladium are the auto industry through the
Catalytic converters.
Catalytic converter. Yeah, I mean that's obviously a big demand. I view gold and silver as the true precious metals. If you want to talk about palladium, platinum, yeah, they're precious, but they're all and silver's also industrial too. Don't get me wrong. But gold and silver are the true precious metals, and I view those as more speculative, more specific. If you're going to buy platinum or palladium, do your research and know why you're buying it, for what reason, and follow that reason to see whether it's unfolding or not unfolding.
I see. What are your thoughts on SLV, holding SLV, considering everything we've talked about today, GLD, SLV, all of these trusts, so to speak, that have multiple claims on the same unit of metal
Right.
here? I mean, are these what's going to happen to these ETFs?
I would just say read the prospectus. I would say read the prospectus, and if you decide you want to buy those after fully reading the prospectus, then I would suggest you didn't understand what you were reading, because they do not have to hold physical metal. They could be all contracts.
Mm-hmm.
And obviously, like you just said, there's the potential and the problem of multiple claims on the same ounce.
Yeah.
I think physical metal in your hand or stored in a private non-bank vault is far better, and segregated, not allocated, not an unallocated account. You want segregated account where your metal is separate from other metals. And of course, in your own hands, it's in your own hands.
Mm-hmm.
But that's when we first started talking about failure to deliver, that's one of the problems, is that in order to keep this game going as long as they did, they had to lend out that first, that 1 ounce of silver or 1 ounce of gold. They had to lend it out 10 times, 20 times, 50 times, 100 times. Now we're to the point of there's 200, 300 claims on individual ounces. How does that work? It's a game of musical chairs where, there's a mob in front of you before you can even see the chair.
Yes, sir. Well, I don't know what else to say, after hearing all that there, Bill. Anything else you want to talk about before we wrap up here?
Yeah, I think I've posted this myself. I believe this is the rally you don't ever sell. It doesn't matter. I mean, if silver goes down $5, $10, whatever, gold goes down $200, $300, $500, who cares? Because you can see the end of the road. You can see the end game.
Mm.
And the end game is either you have metal. When I say metal, either you have capital or you don't. And when this system breaks and the next system starts, you're either going to start with capital or you're going to have to start all over again. So don't get cute. Don't think, okay, silver hit $53 today. I'm going to liquidate it. And in a couple months, when it's $45, I'm going to rebuy it. The problem with that is we may not get out 2 months, and we go through a failure to deliver, there is none. Your silver has already been sold, and you're just like everyone else with money in the bank that just got wiped out through the great taking. So I do want to caution people of trying to be cute and liquidate and trade this. This is not the rally that you trade, because we are at the end game.
It is weird, because if you are like a mining stock investor, I mean, it has been a joy looking at our portfolios the last several months, especially the last few days. I mean, it's a wonder to behold, but at the same time, it's kind of scary, because it does imply that everything we talked about is coming true. You're being vindicated.
Yeah, let me ask you this, Danny. At speaking to mining investors, okay, so you put you lived for the 15 years of mining stock underperformance, and now all of a sudden they're exploding. We're getting doubles, triples, quadruples. I mean, we're crazy action in the mining companies. But if you understand what the end game is, if you don't have your physical stock certificates and your broker goes under, what good is that to you? Because legally, those mining stocks are not yours. They're owned by your broker for your benefit, but you're not the legal owner. Your broker is the legal owner. And if they go out of business, guess what? You had all those great gains, but now you have zero, because your broker died and he took your stocks with him.
And for those who don't know, because I think we've talked about this in like an earlier episode, maybe last year or so, on how to get your stock certificate. Do you mind just doing a quick refresher for people who may be watching this for the first time?
Sure. In order to get a stock certificate delivered, and I'm talking about your core positions, the positions you don't want to lose. You contact your broker. You tell them you want to DRS the security. That's direct registration. You want to direct register the securities with the transfer agent. Now, there's probably a dozen or more transfer agents, and that you'd have to ask your company or your broker who the transfer agent is. But once they electronically send your shares from the broker to the transfer agent, so now your broker no longer has it on their books, because when it's in the account with your broker, they own it, you do not. Once you shift it to DRS and you send it to the transfer agent, once it gets there, then you contact your transfer agent. You say, I want the paper certificate. And the paper certificate acts as the same thing as a deed to a house, a title to a car. It is your proof that you are an owner of whatever percentage of the company. That's your proof. That's your receipt. You can provide that as, look, I am an owner. This is mine. My name's on it. When the system does break and brokers go down, people are just unwittingly going to lose their life savings.
And suppose you want to sell before the system goes down, would you still be able to sell through your brokerage app, or would you have to go through some other procedure?
Yeah, you'd have to deliver the stock certificate back to your broker with a stock power attached to it, with your signature and signature guarantee, and then you can liquidate it. And it's a little clunky. I mean, it can take 5 to 7 business days to get that done. So it's not as convenient as clicking a button on a computer. But I think the inconvenience of having to do that versus having the real probability of losing the entire asset, I think it's far better to have it in your own hands.
Yeah. At the very minimum, to get some of your, like you said, your big core positions, at least get those in line.
Right.
Well, Bill, fascinating discussion as always, my friend. I know I asked this before, but anything else you want to bring up before we sign off here? Or are we good?
No, not really. I mean, it's just keep your eyes open because it's happening fast and furious.
Yeah, it certainly is. Well, Bill, thank you so much for your time, my friend. Where can people find you if they want to see more of your work?
You can go to my website. It's simply billholter.com. There is a contact button on there if you need to contact me. If you want to contact me through my business email for precious metals business, that is BHOLTER at proton.me.
Okay. We'll have the links to that down below. So check out the website, guys. And if you got value out of this podcast, drop us a like and comment. Go, Bill, go. And the